why you still can't afford a home, even if prices drop. If you're waiting for Australian house prices to drop because of new tax changes, this might completely change how you see the market. Right now, there's a lot of noise around capital gains tax and negative gearing. A lot of people are saying, this is it, prices will finally fall. Now, if you've heard the term negative gearing and thought, what does that even mean? Let me simplify it. Negative gearing just means an investor is losing money on a property because their costs are higher than the rent. So if you're a first home buyer, this is something you really need to understand before making your next move. Because what sounds like a solution might actually make things harder. Let me explain. So first, what are these changes everyone's talking about? There's a proposal to limit negative gearing to just 2 properties per investor. Sounds big, right? But here's what most people don't realize. Only about 5 to 6% of investors in Australia actually own more than 2 properties, which means around 95% of investors wouldn't be affected at all. So straight away, this policy doesn't really shake the market the way people expect, and it gets more interesting. Most large investors, the ones with serious portfolios, don't even rely on negative gearing in the first place. They often buy through companies or trusts, so if anything, they'll just adjust their strategy and keep going. Now think about that for a second. If the majority of investors are unaffected, and the big players can work around it, is this really going to flood the market with cheaper homes? Probably not. Now let's talk about capital gains tax. There's been talk about changing the current system, where investors get a 50% discount if they hold a property long-term. One alternative being discussed is a tiered system, basically rewarding long-term investors more and short-term flippers less. Something like no discount under 1 year, gradually increasing to 50% after 5 years. Honestly, this part actually makes sense. It discourages quick speculation, those buy, flip, sell strategies that can push prices up quickly in certain areas. The key question: will this make homes more affordable? Not really, because the biggest issue in Australia isn't tax policy, it's supply. We simply don't have enough homes, and that shortage is expected to continue for years. So even if some investors pull back temporarily, what happens next? Fewer rental properties, which means rents go up. And when rents go up, investors come back. Because higher rental returns make property attractive again. It's a cycle, and this is where a lot of first-home buyers get caught off guard. Because you might be thinking, great, investors will leave and I'll finally have a chance. But in reality, you could end up competing in a market where rents are rising, supply is tight, prices keep pushing upward over time. Now here's my honest opinion. These policy changes are more political than practical. They sound good, they create headlines, but their real impact on affordability is limited. And this isn't just opinion. Multiple studies and institutions have pointed toward the same conclusion. Now don't get me wrong. That doesn't mean you should rush into buying blindly, but it does mean one thing. Waiting for a big crash because of tax changes alone could leave you stuck on the sidelines. And in property, time in the market has always beaten timing the market, especially in Australia, where the system is incredibly resilient. Think about it. Even during major events like the global financial crisis or market corrections, prices didn't collapse long-term. They recovered and kept growing. So for you as a first home buyer, the real question isn't, will tax changes make property cheaper? It's, am I financially ready to enter the market when the right opportunity comes? Because the fundamentals, supply shortage, population growth, strong lending systems, they're still there, and they're not going anywhere anytime soon. So here's the simple takeaway. Limiting negative gearing? Minimal impact. Changing CGT? Slight behavioral shift, not a price crash. Housing shortage? Still the biggest driver of prices, which means property prices and rents are likely to keep rising over the long term. Now I'd love to know what you think. Do you believe these changes will actually help first home buyers? Or just make things more complicated? Drop your thoughts in the comments, and in my next video, I'll break down which Australian areas are still affordable right now, and where smart first home buyers are actually entering the market. So don't miss that. Don't forget to like, subscribe, and stay tuned for more real estate insights from Realty Reels.